Good day, everyone. This is Patrick from EasyFX Code Trading System, and it is Saturday, the 12th of August, 2023. And it's the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the third week of August. And as we look across all the three majors, it's all quite similar, with an attempt on Thursday to climb up higher, but blocked by the resistance zone before falling back down into the support zone. And that was the Thursday's US CPI news, where it was slightly lower than expected, but it was still higher than the previous month's figure. So although it initially looked like it was slowing down, but actually the forecast was already for a higher rate. And similarly for the pound, although it did not climb as high and it did not drop as low on the Friday compared to the euro and the Aussie dollar, especially, where it has fallen through a key support at the round figure of 65. So that's going to be a critical area of support. So let's look at the news that drove this last week, and as well as looking ahead for this coming week with some of the central bank minutes that's going to be released. And here's a look back at last week's key fundamental news, where main driver was from the US CPI figure on Thursday, where it came out slightly lower than the forecast figure, but compared to the previous month, which was 3%, the forecast was already higher than expected. So, and it did come in higher as well. So initially the reaction was to spike higher against the US dollar, but after that it just hit the resistance zones and fell back down, and followed through on the Friday with the PPI figure, which came in stronger than expected and higher than the forecast. So that continued to provide support for the US dollar to climb up higher. And a surprise from the UK with the GDP figure coming in stronger than expected. So that helped support the sterling pairs and the cable to not drop as much as the other major pairs against the US dollar. So looking ahead for this week, there's a release of the RBA minutes and the FOMC this coming week, and we'll get a glimpse into details of their meetings, and we'll see whether there's anything discussed for the next upcoming meeting and rate decisions. But key news this week will be from the US again, with the retail sales figure, and coming in with a higher forecast compared to the previous month's figure. So the market expecting a stronger, robust figure this time round. And from the UK, their CPI figure is forecast below 7%, and it's been dropping over the last few months. So compared to the previous month was just below 8, and now they're forecasting below 7. So that's quite aggressive forecast to for a lower inflation figure. So that could impact the sterling pairs, and that could drive it lower actually. If this could impact and influence the Bank of England to pause and slow down their rate of increase. Then there are also some jobs data from the UK and Australia. And again, UK on Friday with their retail sales figure, but this time a negative forecast compared to the actual for the previous month. And it has been oscillating around the 0 mark. So it has been positive and negative alternating every other month. So after a strong figure the previous month, market is expecting a lower figure this time round. Okay. All right, so let's move back to the analysis. Let's begin with the euro. And after dipping down at the start of the week from the 110 round figure and into the support level at the 786 FIB retracement, managed to climb back up. And then with the US CPI news, it shot up, but was restricted by the resistance zone and quickly pulled back. And then on Friday, with the better expected US PPI figure, it continued to dip lower and back into almost into the support zone again. And if we take a look on the weekly time frame, and you can see that there's still a bearish close for the week and with a strong bearish body. And it's almost a harami, except that it did spike through the high on a Thursday. So it's still on a bearish bias for the last 4 weeks now. And if we take a quick look, and it could be even setting up for a drop here if it falls through that key support. And it could be also a bearish flag here. So let's update this with this bearish flag here. Okay. And we could also perhaps update this FIB now and use the low of the previous month to the recent high, which is also the high of the previous month in July. And it has been finding support at a 786 the retracement. Now if it does break below, which is this key support now, then it could very well target the swing low. And right below that, there's another critical support at the 108 with the daily 200 EMA. So this area of resistance is still valid. It has been tested and rejected the price there. So yeah, if it does break this lower trend line of the bearish flag, then it could target the swing low and even lower. Okay, so let's leave it at that for now. And this week is just mainly exposed to the US news with the retail sales and FOMC meeting minutes. All right, let's compare this with the US dollar index, the DXY. And here's the US dollar index. It did try to break above this downtrend line, but only on Thursday after dipping lower due to the US CPI news, hitting support at the swing low at the 100 pip, managed to bounce back very strong and close above the trend line. So that bullish close there with a hammer-like candle resumed on Friday with the PPI figure, a better expected figure, and continued to target the 62 pip resistance zone. So that's the key resistance, and this break of the trend line here, that's going to be support at a 102. And this is definitely a key support at the swing low. Let's mark this as a strong support zone now. And right below that, another support at the 101. And let's remove this for now. Now, above this, I think we could actually target the 103 zone along with the 50 pip. So it could be bullish momentum to continue higher, and it needs to break above the daily 200 and either hit the 50 pip or maybe even the 103, where it aligns with the downtrend line of the bigger symmetrical triangle, upper trend line of the symmetrical triangle, where it broke down the previous month. Now it's climbing back up to retest that all the way and perhaps climb back into it. So we'll see. So critical at the 103, that could be a target there. Let's check the weekly time frame. And yes, that's a very strong bullish candle there, and a strong bullish close. That is likely to be a continuation move. So critical area of resistance now, there's the lower trend line of the symmetrical triangle, and there's the 50 pip and the round figure 103, which aligns with the upper trend line of the symmetrical triangle. And we zoom out, you can see that's a major consolidation triangle where it did break down from there before. Okay, so let's see whether this week's news will provide any impetus to push the US dollar even higher with the retail sales and the FOMC meeting minutes. Let's move back to the other pairs. Let's continue with the cable. As with the other majors, it did manage to climb up higher until it reached the 10 SMA here. Dropped on the Tuesday, but trying to find support from the trend line. But then eventually dropped further, continued to dip into the support zone. It did the temporary spike through with the US CPI figure, but then was not able to overcome the resistance and fell lower. So only a bit of respite on the Friday with the UK GDP figure, which came out stronger than expected. So that helped to push it up for a bit before being constrained by the US PPI figure. So it's been fighting against the US dollar, which has been trying to recover and climb up higher. So now it's being squeezed into a corner here, and this coming week there's going to be a number of UK related news, so jobs, CPI, and retail sales, and along with being restricted by US news with retail sales and FOMC meeting minutes. So it's going to be a tug of war between these two pairs, these two currencies. So critical support zone here now. I may just move this out and move this one in here to find support at the 50 fib and major support at the 125, along with the 21 fib, where the daily 200 is rising up into. This area is still interim resistance up here. And we could drop this strong resistance into the 129 now. Now, similar to the euro, it could be also a bear flag. And if it does break down, then it could tumble all the way down to the 125. So also critical zone now with the it's at the bear flag here. So critical week now for the sterling pairs, and it's going to be a lot of news to drive it one way or the other. Except that for the UK CPI, they're expecting a lower rate, so that should actually drive it lower, drive the cable lower. And it depends if the US dollar gets a boost from retail sales, and that also could cause the cable to break down. Let's just check on the weekly time frame, and yes, it closed as a spinning top for the week and a harami. So it's critical for this coming week now. Okay, so let's move on to the Aussie dollar. And for this case, I think we'll leave the fib as it is. Still some major fib retracements that it needs to hit first. Okay, so let's move on to the Aussie dollar, and it has broken below a critical support at the 65. So let's move that out now. And the next key support is at the swing low, the 100 pip. It's getting really close, so it needs to find some major support there. So mark this now as interim resistance. Above that, at the 62 pip, there is fairly strong resistance now, so we could mark this as a strong resistance zone and take this one out for now. Okay, so now you can see the effect of this double top chart pattern and the break of this neckline. Now, if we draw a fib for this break of this neckline and see where the 200 fib extension is, it's almost as a confluence with the 138 fib of this previous swing move. So down to the 63 round figure. If it continues on its path to the 200 mark. So we'll see what happens, and especially with some Aussie news, but it's also exposed to a number of US news, the retail sales and the FOMC meeting minutes. So I'll just leave this reversal fib for reference and to see what happens next week and see whether it breaks this swing low. And if it does break, then it's going to target the 162 fib extension just above the 64 round figure. But let's mark the 63 for reference now. Let's do that again. Okay. And let's just check the weekly time frame. And yes, it's a continuation, still bearish momentum, and for the 4 weeks. So it's really has a strong bearish bias now. All right. So critical week for the cable and the Aussie dollar. And do check out my other videos on spot gold and dollar yen, and have a safe week and a good trading week, and cheers for now.